Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long trade here on crude oil. Now, we're coming off of a massive area at the lows, right? The overnight session had a gargantuan drop lower, and that big drop down didn't really keep going, right? A lot of sellers were probably selling the retrace, trying to get in for a secondary leg to the downside, but it kept going up, and that's not what you want to see, right? That's a little bit concerning. So what that ends up being is more likely when you get a scenario like this where the correction turns into more of a reversal, if they do end up coming back to the lows, you're going to have a lot of profit taking at that low. Now, sometimes it will break out through that low and continue and get a second leg down and, just keep driving down to continue this overall European session bearishness. But in this case, it hit the low, ticked underneath it by just a little bit, just enough for buyers to get filled, slams the market right back up again. Now, that's not what you want to see for a trend. A trend should break below that low and keep going and going and going, right? That's what you want to see for a trend. This is starting to turn into a range. So with that failure at the range, we then come back around, test that low again to the tick, and rocket higher with a bull engulfing candle. So that smash higher is really what we're looking for to kind of confirm, the buyers are obviously interested in this low and we should never come back to it if we are going to get a reversal. Now, trying to call a reversal in any market is always difficult. In this case, you're buying the lows of a range, so this type of reversal is a little bit easier to get your hands on. But we are buying, probably about 25% off the low, so expect a little bit of a correction, which is why the stop is down here. You may be able to get a better fill, but overall, we shouldn't ever break back down below that low. If we do, I don't want it anymore. Now, because this probability of this type of trade isn't as high as we would like it, we would love to see a move, back up towards, the highs of the range. But again, knowing that there's going to be a little bit of a pullback, we need to make sure that our profit target makes sense. So with our profit target, from our stop to our target, we have a 1-to-1 move up at 47.02. But again, we just talked about probability. Mathematically speaking, it doesn't make sense to go for a 1-to-1 in this type of trade. It just long-term doesn't really fit that well. So instead, we need to go for a 2-to-1, which is back towards those range highs. Well, how coincidental, right? I think a lot of buyers are probably thinking the same thing. So our objective is going to be at 47.24. Now, the overall move up, if we do end up catching this drive to the upside, we did break through the lows by a little bit, so it's anticipated that we break through the highs as well a little bit. Right? Now, we may get a run through the highs and it may just slam higher. We don't know that yet. But given the context right now, that's kind of what we're looking for. The next objective above us would be the prior low of day at 47.33. So that is going to be the final objective up there. And that is a pretty decent break through the highs. Essentially kind of looking at the fact that we broke through the lows a little bit. We'll probably break through the highs a little bit and that'll be able to let us call it good. So that's going to get that ready to go. Now we just have to wait for the buyers to show up to the party. We have the entry 46.80. Now we're just waiting for a rotation back towards the highs, seeing the sellers failing at the bottom, and we'll see what the buyers can do. So we're coming into another possible sell trap here. Normally, I don't like adding to positions with a worse entry than my original entry at 46.80, but everything is looking really strong here, and we know that sellers are going to be trying to get into this move, assuming, hey, it's a range, we should probably cycle back down to the lows, but what they're not paying attention to is the fact that the sellers have already filled their objective. So we know that the sellers are trapped in because we went one tick underneath, which means their stops are going to be one tick above. So I want to be buying into their stops. I want to try to drive this market higher. Now, the targets, in this case, we're expecting a little bit of a break higher. So honestly, I kind of want to leave an open-ended target on this one because we could end up having a run to the highs and then a breakout through the highs, given the amount of sellers that are likely trapped here. So if we do get triggered in at 46.93, that is a very big clue. And I'm looking to now lift my targets. I know that I have to get filled at least 24, right? That's our 2-to-1 off of the initial entry point. But given the scenario that we're in, we do have potential for a little bit of a bigger run. So we're just kind of keeping an eye on it at the moment and saying, well, if this does break out through the highs, I want to be able to catch the extra 10, 15 ticks that it gives us, instead of just cutting our profits short. When sellers are trapped, especially when they realize that they're trapped at the lows of the range and they know that the market's going to rotate back to the highs, that's usually when you see an exodus where the sellers they hit the close button, they don't want anything to do with it anymore, and they liquidate very aggressively. Now, the nice thing about this is because of the scenario that we're in and we're trapping the sellers, we don't want to see the low of that trapping candle broken. So even though we are adding to our position, our stop can lock in very, very tight, and our risk is only 4 ticks now. So given this type of scenario, it makes it worthwhile to add in more if you're able to, and that's why I am. Because we're reducing the risk significantly on the trade, whereas the profit target is still 47.24 or so. So now that we have sellers trapped in, their stops are going to be above the highs. 94 is the high, so 95, 96, 97, their stops will be up there, and that's what we're looking to breach to continue this move up. So we'll give the buyers a little bit more time here. We have a secondary entry in, and now we just have to wait to see. There we go. Got the little stop run. Now we have to see how aggressive of a stop run this is to see if we can drive this thing up towards the highs again. All right, we're seeing the trap continue, and look at the sellers exit this move. They don't want anything to do with it. Huge run higher here. There will be sellers that are entering in around this prior area here. Look at this, driving straight into the target area. 24 hit, and it's already blown through. So this is the blow through that we want to see. I want to make sure that we at least try to lock in at 24 if possible, but you can see this strength right now. This isn't the type of candle that I want to exit early on. It is the type of candle that may hit the highs and pull back on itself a little bit, but we're anticipating this to continue its drive higher. I know that I don't want to see the low of this candle ever broken again, so I can move my stop up to 94, but I'm looking for this to continue. And look at this pop through. This is why you don't exit early when you're picking up on sellers getting trapped, right? We're pushing in. The gap fills at 47.42, just above us. We have a lot of upside potential still if this does want to continue breaking out. Prior low of day is tested at 33. Now, you could lock your stop in to 24 and say, you know what? You're either going to give me a bigger move or I just want 24. I'm going to give it a little bit more time here just because, again, right now it's obvious that the buyers are in this. Buyers are slamming this market higher. There's no reason to get out yet. So even though we could lock in 47.24, I don't want to choke the trade out and miss a potential burst higher. I don't know if something fundamental is going on or if some news came out, but we're getting a heck of a move up. So now at this point, you're sitting up 60 ticks, right? So 60 ticks on that, you can probably, again, move your stop up to 24. I don't want to choke the trade out. Now, if it does start pile driving back on us, yeah, we'll definitely look to exit, but you can still probably get an exit at a much better price. Now, given how strong of a move up this is, this has the potential to continue higher. We're seeing a strong bullish breakout potential move here, but what's the problem? Right? Let's zoom out a little bit. It's the context. The context of the situation is we're back towards those highs, right? Well, where did we just come from? We came off of the lows and we saw the sellers fail to get down there. So it's assumed that even with this massive run higher, we're anticipating some potential failure. Now, that may come in the form of a scalp, which is all I'm going to be looking for. As soon as this candle closes, I'm looking to liquidate my position, but I'm going to let the candle close now. We have such a huge run higher here that the chances are we're going to continue driving up until we find either an area of support or resistance or whatever the case may be, but there's still a potential for a really big move up here. I mean, look at this run higher, going on 100 ticks now. So this move up, I'm going to get my profit target ready all the way up here just to get it out of the way, and I'm actually going to sell an additional one. The reason behind that is this is turning into exhaustion. We have a huge move up. The likelihood that buyers are going to hang on to their profit targets after a move up like this is super unlikely. Now, that being said, we're still anticipating a larger move up in the long run, but they're probably going to want to buy a pullback, not buy way the heck up here. So, given that information, I'm going to be looking to scalp a quick position back to the downside for just 10 ticks. And that's what I'm looking for at the moment. Beautiful run higher here. Given the context, we only have a couple seconds left on the candle. I will lock into 24 just in case something crazy happens. But once we have 10 seconds up, this candle will complete and I will look to exit at the close of the candle to enter into a possible short position for a scalp, as well as take our objective off to get a nice little move. There we go. So target filled on the move up, huge run higher. Now we're looking for a quick counter scalp here down to 72. The target versus the stop should be at 92. We have a 10-tick stop for a 10-tick target, right? That's what we're looking for at the moment. Again, the big reason behind this is with this huge of a run higher here, we're anticipating that the buyers, well, guess what? They're not going to want to buy way up here at 82. The only thing that's going to happen up here is that the sellers are going to pile into the market, and there's a quick little 10-tick scalp. So that's what we're looking for. Right now, I still want to buy, but given the context, I don't want to buy way up here. I want to buy a pullback, right? Give me something that I can buy instead of buying way up here at 82. Maybe wait for a little pullback to buy into that, something along those lines. Overall, just a beautiful back-to-back-to-back trade. Huge runs off of the lows. Really good, just a clue when picking up and the sellers getting trapped. Let the trap happen, see where it goes. In this case, it rewarded you handsomely with a gorgeous run through the highs, which led into a little bit of exhaustion. The buyers are done. They're going to take their profit at the highs, and that allowed us to quick scalp on the opposite direction for a fast little move down. Still looking to buy, but not buying way up here. So overall, that's going to do it for me. That's the type of trade that'll make your week. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.